loud and clear.
Oh, okay. I wanted to confirm. It's very, very kind of low on my side, so trying to confirm.
Yeah, I think I'm getting almost a similar reach, but I can get you quite clearly. That's the good thing.
Nice to be
So,
online with you guys today. Hello, everyone.
hello JFX, nice to have you. Thanks for joining us today. We'll be talking about crypto, the crypto market, and technical analysis. How we can apply this knowledge of the technical analysis in the crypto market. I've known you. We've known for God knows how long, and maybe most of the people here, or some of the people here, also know you as well. But for the sake of those who basically don't know you as much as myself and anyone else who probably know you, just give us a quick background, a quick introduction of who's JFX.
Uh, all right. So I don't know if it's possible, if the section can be recorded. I wanted to be sure we're
Yeah,
recording.
yeah, yeah, yeah. I'm recording right now.
All right. So we
Yeah,
share
I'm
it today.
recording.
Like I'm getting messages popped up on my DM. Some people are saying for my channel that they want to join in, but if I can have the recording, so I'm trying to confirm that. All right. So hello everyone.
Okay, no.
There's not much to say. I don't think there's much introduction to do about myself. We are here to learn about the crypto space and how we can advance in the aspect of wealth and in the optimizing, the crypto market. So basically, he told me the topic is about um, how to, apply the technical analysis aspects to cryptocurrency, or how we can use, technical analysis in cryptocurrency market. Because, I'm very familiar with technical analysis, but majorly in the Forex market. But I have been applying it also to the crypto market for about 2 years now. I joined the crypto space over 3 years ago, but I was into more fundamentals. So 2 years ago, I started using technical analysis as well, and it's been mind blowing. So, when he contacted me and told me he was having a crypto show, I said, okay, no problem. That's something I'm familiar with, so I could share a little bit of insight with you guys as well. So, when it comes to trading and, trading in general, whether crypto, stock, or Forex, we all understand it's a matter of probability. So, it doesn't matter which aspect of analysis you use, sentimental, fundamental, it's all a game of probability. So
Probability.
nobody is that perfect, nobody is that little. So the little that I have, I will be sharing with you guys today, and we can see how we can apply that to the market.
Okay, thanks a lot. Thanks a lot for that. I think that's basically it. That's the introduction. So, without taking any further of our time, what exactly in the most basic terms, what is technical analysis, and how can this actually help traders? Let's leave the crypto market for a minute. What exactly is technical analysis in simple terms, and how can it be useful to traders?
All right, so I'm going to say it in a very, very plain understanding, outside just trading. So we all can be able to understand the terms I'm using. So when you say technical analysis, basically, when you say technical, you're talking about calculated, you know, methods. Basically, you're not talking of gambling. You're talking about using technical methods. So the word technical is self-explaining. All right. So when it comes to technical analysis, it's about understanding. When it comes in trading, it's about understanding the chart movement. So as we understand, trading is all about frequencies. I used to tell people this. You need to understand that trading, the fact is dealing with currency, it's a frequency. So for you to understand frequencies, you need a particular method of analysis, be it bar charts, line charts, histogram, or candlestick. And in the aspect of
Clever.
trading, on these aspects, we use candlesticks. So when you're talking about technical analysis, for me, I use price actions, which is the combination of multiple candlesticks and understanding the movement of the candlesticks itself, not just adding any other indicators or using indicators as the main direction of the trend or understanding the trend. I understand the movement of the candlesticks based on the frequencies they are giving. So these frequencies are different on multiple time frames. As we understand, we have multiple time frames in the market. We have the 5 minutes, 1 hour, 15 minutes, weekly, daily, and even monthly. So when it comes to technical analysis, you need to understand that the frequencies are based on time frames. So you could be having an insight on the 1 hour time frame, 15-minute time frame. If you don't know how to apply these frequencies to understanding the pattern which this market might be giving out, because the word pattern means something which is repeated frequently. So when you repeat a particular scenario frequently, it becomes a pattern. So when you're dealing with frequencies, all you're doing is trying to spot those patterns within the candlesticks, you're analyzing. Because I use candlesticks and more of line charts. But the line chart has its own method to it that let's not go there. Let's focus on the candlestick. So using candlesticks, you can basically understand the frequencies of this market and how to read them. How to have an insight into the next direction or what it's probably to do next. So on the aspect of crypto, I use more of the higher time frames because we understand that cryptocurrency is a very volatile market, and the frequencies can change at any time due to personal influence or whales, according to the crypto term. So mostly I prefer using the higher time frames like the weekly or the daily to give an insight on where the market could be moving for the week, because I do more of spot trading. So if I could give myself a prediction for the week that Bitcoin is probably going to be moving from 55k to maybe 60k, then I can have a stand or maybe on a 15-minute time frame for an entry on the spot while I hold till Friday, expecting my predictions to play out based on the frequencies I've gotten from these time frames. So if I'm dealing on the 1 hour time frame, I understand that to the weekly time frame, because my predictions were done on the opening of the week, but my point of entry was gotten on the 1 hour time frame. So basically, technical analysis is understanding these tools and trying to read the frequency of the market using these methods I've explained to you guys. So this is one of the reasons I was asking we record this section, because when you're used to always explaining, you can be fast, you can be here and there, but when you go through the recording, you could pick out those informations and try to understand them yourselves.
Actually, that's very true. That's very true. The technical analysis is one's ability to identify similar recurring patterns in price charts and then make predictions. Let me use that word, based on these calculations from this price pattern. Now, you've been mostly, I don't know if I would mostly say forex trader, but I say you're a financial market analyst because it covers everything all. But you mostly being a forex trader, for example, and having this knowledge of technical analysis that can be applicable to the crypto market. Um, do you say that technical analysis is there something that's different the technical analysis comes to trading the forex market or when it comes to trading the crypto market?
Okay, so like when I was learning in my early stage, one of my mentors used to give us a quote. He says, it doesn't matter the frequency you're looking at. What matters is how well you know the pattern you're looking after or looking out for.
Yeah.
So if the frequency on Bitcoin, according to fundamental data like a news being released or maybe an expectation or a forecast is heading up, and then you're looking at something on the maybe the 4 hour time frame, and you could spot a clean demand or supply zone if that's what you're familiar with, or a support or a resistance level. I don't think the markets on any market at all, be it stock, forex, crypto, is immune to logic because these methods are logical methods. But if you happen to not have a broad understanding of these methods, you could not be able to easily understand the price actions of these pairs. For example, if you're talking about cryptos, sometimes you might see what we call a spike, happen in the
Yeah.
market, which is not something that is that frequent on the Forex market. When you see a spike, especially something you're not familiar with, it ends up giving this discomfort, or let's say this imbalance in price action, which is something Forex traders might not find, would I say, common, So if you're new to the crypto world, or you don't understand these things as common faculties on the crypto market, it could be a little bit challenging for you, or it could lead to someone even saying the crypto market is immune to technical analysis, or it doesn't respect technical analysis. But all I would say is no, they all respond to analysis. Basically, everything in life is mathematics and statistics. So if you can understand the
Numbers.
the, the
Always.
statistical data and the numbers on the charts, whatever market it is, you can actually predict the future of it.
Yeah, yeah. Okay, that's a great one. That's true. I always say that one reason why I like technical analysis is the fact is simply just because it is backed, because everything, almost everything lies, but number doesn't lie. It's obvious. If one plus one is two, then plus one has to be two. It's one plus one. It should be two. So numbers doesn't lie. That's good. On a bigger picture now, let's look at fundamental analysis and technical analysis with regards to the crypto market, because I've had, I think the guest I had last week, the guest I had here last week is someone that basically looks at the market more from a fundamental point of view. He believes that as long as he's in tune with fundamentals with regards to the crypto market, then he's on the right course. And the interesting thing here is he is, or he used to be, a forex trader. I've always known him. He has been in the forex market for 4 or 5 years before actively moving into the crypto market about 2 years ago. Yeah, 2 3, not up to 3 years, about 2 years ago. So but for him, his emphasis is on businesses, on news, on fundamentals, on major events in the market. And for me particularly, I don't look at the market more of from a fundamental point of view. I look at the market from, I believe that fundamentals is just going to push price in the direction what we already have in the technical analysis. So I would like to have your take on that. Since you're also someone that is, you are skilled in technical analysis, you understand the forex market quite well. In fact, I'll say you're an expert in it, and you also do cryptocurrency trading. Putting all of this together, which do you think carries greater weight, fundamental analysis or technical analysis?
Okay, so generally I would say they are both two different things. You can't listen to a hip hop song and listen to a love song and expect to have the same vibes, or compare a hip hop artist to a is it red and blues, or what it calls. Well, you don't really do that kind of stuff, because it's going to lead to complicated situations. They are both musics, but they are different things. Fundamentals are,
Yeah.
are a different aspect of analysis that helps generally. Whether you're into technical aspects, you can't neglect the fact that NFP is coming up, and then say you have a demand zone, and DXY is going to go bullish. You don't care about the NFP. You don't do those kind of things. If you are very
Don't care about anything
professional in
else.
trading, you understand that those are different things, and they are both helpful. It doesn't matter your perspective or what you think. They are both helpful. So if you can be skilled in both aspects, it's a very, very good thing. But if you can't be skilled in both aspects and have to understand one, then you need to be very good at that. Because if you're good at technical aspect of trading, you would understand that the news are also what I call excuses to move the market. Because if DXY is going to move, it's going to need a fundamental reaction to move, like NFP or CPI. But at the same time, it's going to still be in line with technical analysis, just to make sure that, the whole system is balanced. So if you're familiar with both aspects, it becomes a great insight. But if you're not, it's better you are in one aspect before you can say you are a trader, to make your own predictions yourself. So I don't think it's good to compare both. I think anybody who says one is better than the other is somebody who doesn't have enough experience in both aspects to understand that they are both different and useful tools. You understand? It's a very, very understandable question. Like it's not a question to even compare. You understand? Whoever is arguing or saying technical analysis is not relevant, fundamental is more relevant, he's clearly just ignorant about one of them. You understand? So you don't have to make everybody understand a perspective to use it. You just have to apply it. If it doesn't work, you find out. If it works, you find out. You don't need to, be a defender or, have a role to play in the whole game. So that's my intake for that.
Listening to you, it kind of just makes me, there's this bright expression it puts on my face because about a week, let me say about 2-3 weeks ago, I posted something in my channel, which the reason why I actually posted that was because I was in this other community and I saw two traders arguing seriously, like exchanging words on which techniques of trading. This one is arguing for one technique and arguing for another, and I sat there watching at them, and the only thing that could come to my head, it's not baseless. What's the need for this argument? If you feel so much that watching the market is effective, it works so well, then why don't you just focus on it work rather than arguing with someone if it works or it doesn't work? So I get exactly what you say, and I think that's very right. Now, the past couple of days in the crypto market has been, the past couple weeks, I'll say, has been quite a very one. Prices has gone down quite significantly, keep killing a lot of the opium that most traders were having. A lot of people were very optimistic, expecting immediately Bitcoin broke previous all-time high. People were expecting price to go 100%, 200% from there. It's more like price have been stagnant. It's just been within a particular range, and the past 1, 2, 3 weeks have not just been within that range, but it has been quite bearish within that range. So, based on your understanding of technical analysis, what would you say it is with Bitcoin right now? And are we still in a bullish market?
Okay, so that's also a very good question. Like I said at the beginning of the section, I understand the market to be frequencies, okay, and frequencies deal with time frames. And if I think everyone noticed that we are at the middle of the year. This is currently the 7th month of the year.
7th month of the year.
So if we're looking at the monthly time frame or the yearly time frame, that would be a major zone. So it would be a major decision zone, which would move the year in a particular direction. Basically, it will have a very, very big impact in the year. So frequencies are aligned with nature. So especially when it deals with time frames, you could look at the monthly, you could look at the weekly, look at the daily. You can't have a bullish Bitcoin when the world is crumbling. And currently, we can all see the word is bearish right now. We can boldly say the word is bearish. So, I would say we have 4 quarters in a year. And these 4 quarters work in 2 pairs. Basically, the concept of the yin and yang aspect. So, each leads up to 6/6, which is half of the year. So understanding these frequencies, we understand that we are currently shifting into a different aspect of the year, which the market would also give its own reactions to them. So we are the middle, and it's a good time to observe, not a good time to trade. So I won't use the data of the previous 6 months to define a price action which is yet to give its introduction. So I would say the coming week will tell us the next direction for Bitcoin for the rest of the year, or it could also tell us if we are bearish and we should get our money off Bitcoin for now. So everything will be explained in the coming week for me, basically, because this is the first week of the month. So it's not a good time to make predictions when you haven't seen any price action,
Yeah, for the month. Yeah. That's true. That's very, very true. Myself, I've been more on the sideline the past 1 week to almost 2 weeks or so. I've been more just trying to observe what's going on, because it's more like there's a hard reset, there's a reshuffling that's going on in the market. Yeah. So I think that's very right. Now, this is a straightforward question. It's a simple one, though, if you ask me. Can Forex traders trade crypto effectively? And I'm not talking trading crypto on, let's say, Forex platforms on MT4, MT5, or with your Forex broker. I'm talking trading crypto, particularly on crypto exchanges, crypto futures, or spot trading, regardless, but on crypto exchanges. What are there limitations? Are there reasons why it will be particularly stressful for a Forex trader to trade at? Or for me, I would say it's a sort of like a easy entry, if you ask me. I find Forex platforms, trading platforms, to be more complicated for me to use than these crypto exchanges and crypto platform. But overall, looking at both platforms, how easy it is, or what's the entry level for Forex traders going into crypto? Because, like I said earlier, the guest we had here last week used to be a Forex trader. I think the one we had before that used to be a Forex trader. It's more like day in, day out, we are seeing traders go from the Forex market to the crypto market. So why do you think this could be?
Well, I would say when it comes to complications, when we're talking about the platforms, I would say Forex is very flexible, because we have a very universal platform like the MT4, MT5. Almost every trader is familiar with that. But when it comes to crypto, you have different exchange platforms with different backgrounds and modifications. So, but when it comes to complex and risk management, because I learned something in the crypto market that the trading is a lot easier. That there's no doubt. The trading is a lot easier on the crypto aspect than the Forex aspect, because you don't have to really define your equity in a very complex method, to when trading the crypto markets. You can easily just set aside a little bit of profits, a little bit of capital, and then have your equity in a different lane. Like trading the spot market, you can set a limit, and then you know that if you lose this market, you're losing this particular money, not your entire equity. Yeah. But that's not something you can do in the Forex market, outside setting a stop loss. I don't think there's any other method you can protect your capital if you go wrong, So in the aspect of safety and in the aspect of flexibility, I would say crypto has that. And then most traders who don't really have the time to really sit down and analyze the market, because the Forex market is more predictable, that I would say, than the crypto market, because it has a lot of insights and tools you can use to understand the price action. So traders mostly can find Forex more understandable to predict when it comes to technical analysis. But in general, the crypto market is more flexible to navigate. So if you're a trader who doesn't like to do the work, that I would say, and who is not that free to analyze the technical market as that, you might find the crypto market more flexible to trade. You might find it more relaxing to trade, especially when you have the capital to invest in it. But I would say if you're a trader and you're in the game for the experience and you're about to learn different perspectives, different mindsets, because trading is, my time I've spent in trading, I've been able to understand that it's a game of perspectives and life improvement, not actually making money. Because if you come here with the mindset of trying to make money in any market at all, be it forex, crypto, or stock, and you have this overexcitement when you see money, you don't have this discipline to control yourself, I don't think you might do it the way you think. The market would probably take out its time to teach you how to understand discipline, before it gives you the money you're looking for. So if you're in the game for the knowledge and the experience and growth, you won't be running away from any of the markets. You would want to understand and learn more. And the crypto market doesn't have enough tools because it's still very young, that I would say. The crypto market came in this century. Basically, we are the first.
Barely 20 years, less than 15 years ago, if I'm
You see,
correct.
so the inflow and the retail market isn't that as expensive as it's been hyped. It's still very, very tangible. And the foundation of Bitcoin is not yet decided based on regulations and with countries and all that. So if you really say you're in the game for a very long term, I think being flexible with both aspects would be the best thing to do. Because if it happens that your surrounding or your country does not regulate the crypto market in the coming years, you might be able to switch, and you would find it even more flexible to switch. You understand? But when it happens that you don't have that familiarity with the forex market, then you find yourself in a crossroad. And I believe we can all say time is not something we can repeat. We all have equal time, right? So I don't think there's anybody on the planet who has actually repeated any year consciously at one race. You have to actually die to be able to repeat it again. So you don't have that time to be picking sides. You're trying to look for a better life. So if you're looking for a better life, you should be trying everything, and be open-minded for what to come. You don't have that. I don't think anybody has that backup life or an extra time saved somewhere to invest so much time in one basket. That's not a wise thing to do. That especially for a trader, I would advise you become flexible and know how to do everything.
Okay, that's one. That's a very, very great one. Flexibility. That's a very great one.
It's one of the reasons why I'm very familiar with most technical patterns and methods, because the Wyckoff method, might be complex for a lot of traders to understand, but it brings a whole different knowledge to the table. The SMC method might be complex to also understand for some traders, but it brings a whole different perspective to the market and also to your knowledge. Support and resistance is very simple, but it brings an advantage to the table as well. So being flexible, it's at your own advantage because you're able to read people's perspectives and understand their reasons to their market, especially when you belong to a community. But if you're only familiar with the method of trading, then how is the community helpful to you?
You mentioned something earlier that I think is like the most impact of trading for everybody. It's not just with regards to you, myself, or anybody. You come in, people come in first into, like, I can see someone is raising his hand. So what I'm going to do is why would have the our speaker here go on? Drop your question in the comment section. I'm just going to drop a message in the channel. Drop your question in the comment section. I'll pick it up and toss it across to our guest speaker here before we round up for the evening. So I mentioned risk management while talking, and I think that's one of the most important part of technical analysis that is hardly talked about. Risk management. You want to make money, right? Yeah. How much can you manage what you have already? You have a particular equity, you have a particular capital at your disposal, and you are looking to come into the market to make more. How much how much can you protect what you have already before we start to talk of getting it into becoming something bigger, something better than that? So just how much is risk management important when it comes to trading, regardless of whether you are trading the forex market or the crypto market? And what is like will I say simple? I don't think there's anything that is simple when it comes to trading, because it's like, what are the basic things to look out for when it comes to risk management for a trader?
All right, so that's another good question, because so many people don't understand the meaning or the concept behind risk management. Risk management is not actually how much you use to trade. Those are two different things. That is just your equity. Capital is not the money you use to trade. A capital is known as an idea. Basically, for you to be able to do something, you need a capital. So you need the idea to be able to capitalize on something. Yes. So the concept of risk management comes in place when you start to ask yourself, what do I have to lose in this I'm about to do? It's not a matter of how much you're going to be using to lose this game. No, it's what do I have to lose, or what do I have to gain in this I'm about to do. So if you are about to take a trade, like let's say you're about to invest into Bitcoin, the risk management aspect of it is not the leverage you're using in the market. That is based on your equity. So this is where equity comes in. Equity is a whole different thing from risk management. So the equity is based on your financial stability at the moment. That is outside the technical aspect. How financially stable are you to invest at the moment? I'm not talking about how much you have on your pocket, because that's your money. Or I'm not talking about how much in total do you have in your account. I'm saying how much currently do you have to invest and you're willing to, invest in. So when you are able to do these things all together, it's known as risk management, because you're managing risk. So the aspect of knowing the leverage and all those stuff it's a different topic, and the subject is risk management. The topics are leverage, equity, risk plan, trading plan, and some other stuff. And each topic is going to have its own paragraph. The paragraph is how well you personally do the investigation, because you don't expect me to give you my own risk management because we don't have the same equity. So if I give you my plan, and then my plan is for a $10,000 account, and your plan is for a $100 account, it won't match, Exactly. Yeah. So the concept I'm going to give to you is known as my risk management concept. And then how well you apply that to your own system is how well it will work for you. So is the whole idea is, okay, for example, let me give another example. Let's say you have a business and you're about to move into the concept of marketing. So when it comes to marketing, you have to understand who is in charge of advertising, who is in charge of promoting, who is in charge of sales management and all that. all together is known as marketing your business. So the same thing as risk management. What is your trading plan? What is your leverage plan? What is your risk plan? What is your goal for the day? How much are you looking to make in percentage? All this is known as risk management. So risk management is not the risk to reward. As you can see, they never say the risk management reward. They say the risk to reward. So those are also different things. Okay, so trading is an intellectual game. That's one thing everybody should understand. It's a game of intellectuals. The people who created this thing did not create it for you to come and make money. They created it for you to come and lose money. So if you're coming to trade to make money, you have to start thinking like a pro, not becoming a pro, because you're not going to become a pro at all. It's not designed to make you become a pro. You are the one who would look at the market and try to visualize it from the aspect of the one who is trying to liquidate the next person. Right? So if I'm going to be liquidating somebody else, and let's say I'm using the federal funds, I'm not going to be careless. I would have to look out for those aspects that would, go against my predictions, so I don't go against the federal funds I'm using, the firm who is behind me. So for you to be able to make money for yourself, you need to start thinking like you're working for a firm. And who is this firm? That's yourself. All right. So you need to put yourself first. Putting yourself first is understanding what do you have to lose. This is also known as risk management. So the explanation is on a different lane, but it's something that has to do with yourself and what you came here to do. What influence are you working on? Are you trading because you're desperate for money at the moment, or are you trading because you're looking for a new system to invest your time in and see results? Or are you trading because you got influenced by a friend to join the crypto space? So these things are also part of causes to misconceptions and mistranslations, especially when it comes to risk management. So a lot of people ask those questions also in my DM, like, how do you manage your risk? What's your risk to reward ratio and all that? And then on no condition do I react based on emotions. Those are the objectives you have aligned for your trading for the day. And it is very, very, the chances of you losing is very, very small if you do these things. That's all I do basically. So, but if you don't have these things and you don't see it necessary, how do you expect yourself to evolve, So most of these stuffs are misconceptions, especially when it comes to a trader who was not properly mentored, probably, through YouTube and stuff. You don't learn from your own experience. You start thinking of watching more videos. You need to start observing yourself as the experience. You're the lab rats, and the knowledge you acquire are the perspectives. So you acquire the perspectives and then you try them out on the market while you learn from your experience. That's how you teach yourself.
It's been very, very insightful. I think what I like the most this evening is the fact that um, the things you are saying are on popular knowledge. There's the common conventional knowledge when it comes to trading, when it comes to the aspect of trading. Then there's that truth that is in reality that's like is popular because most people don't look at the market from that point of view, and that's where you are taking us from today. That's a very great one. I would basically just have two more questions, and then after that I would see if we have any questions from the audience before we call it a day. Now, first is um, you've given out a lot of what's the word? You've given out quite a lot of very important advices to traders today. I would say that I would say that if there's one particular advice that you would want to give to a younger trader, what is that going to be? Someone that is probably just starting up, because as me and you we know, this is a very this is a very interesting field because aside the fact that it holds the potential to make you quite a significant amount of money, I think most importantly, it is going to help you realize yourself. There's an awakening. If you want to look at a career in trading, there's a certain amount of awakening that you have to have. So I think that's a very good part. But if there's one advice that you would give out to younger traders that just that or that are to channel their energies into what is important when it comes to trading, what is that going to be? So that's the first question. After that, I'm just going to ask the next questions, and if we don't have any questions from the audience, probably start to call it a wrap.
Okay, so um, my advice for anybody, basically, whether young or old in trading, is that the trading space is not a colonized world. And for everybody out there who is looking forward to making a legacy for themselves, it's a free space. I mean, literally, it's a world that is yet to be explored. Take advantage of it now while you can, and try to get yourself regulated as much as possible before the market goes off the roof. Because cryptocurrency is basically encrypted currency. And if we understand that everything is frequency, we need to understand that the world is heading to a space where frequencies and currencies are going to become encrypted. Because as we all know, we are in an age of existence where the world is beginning to understand that everything is actually frequency, and the world is going to at some point accept the fact that the internet is a mental space, same way we live in a physical space. So it's a world beyond life, that I would say, and it's a reality that is yet to be explored. I won't say anyone can give a prediction for the world of cryptocurrency, but I can tell you for a fact it's not going anywhere, because it never came in by anybody's hands, and it's the fastest growing market ever to have existed in time as the earth is concerned. I mean, you can check it up yourself. The cryptocurrency is the fastest growing word ever in the whole world to have ever existed. I mean, down to ancient times, down to the times of religion, down to the times of, conflicts. The world of trading has always been existing. We have always been exchanging and rendering services to each other. But at some point, we got introduced into the financial markets in a world of technical analysis. And slowly, we have now been introduced into the world of encrypted currencies. It's only a matter of time before we start accepting the fact that the world is encrypted, and the same way you don't get to choose your body before you get to come here is the same way you don't get to tell the world where to go because you're not regulated. So if you're going to be here for the long run, it's advisable that you get yourself regulated as much as possible and acquire as much knowledge about the market as you can.
Okay.
When I mean regulated, I don't mean you should go and register yourself with any government. That's getting yourself enslaved. That's not regulating. Regulating is trying to understand other aspects of trading that you can use to benefit yourself. For example, you're a trader, you're good in technical analysis. You can find other means of which you can use your technical analysis to capitalize on the market. If you're a trader, you're good in programming, you can find other ways to capitalize on the market using programming. You're a trader, you're good in graphic designing, you can find other ways you can render services to other traders based on graphic designing. You're a trader, you're good in cryptocurrency, you can find other ways to capitalize in cryptocurrency other than you trading yourself and other than you scamming anybody. So
Yourself.
learn how you could capitalize on the markets and how you could grow yourself into a reasonable brand or even your personality, in this space, and learn how you can be someone to build a legacy for yourself. So that was what I meant by regulations.
Yeah, thanks for that clarification. That was quite important. I guess you've said it all. That's basically the best advice anyone can give right now. Know what you're doing, basically. Yeah. So, quick one. I think there's either one or two question here, but I'm going to give out my own last question before we take that. Quick one. What cryptocurrency projects would you be look give us maybe your top three, top five crypto project that you are holding and you'd advise people to look up. Obviously, do it's very important that everybody do their own research. Well, just your top picks, basically.
All right. So since we said everybody would do their own research, then I will give my own. Because
Now, most
when you asked the
definitely.
question the first one, I was like, I think I would skip this one, but he now said, everybody should do their research.
No,
So yes.
that's most importantly. This is a world of risk. Nobody to tell to to take a risk that you've not done your research and you've maybe calculated your risk before. Obviously, everybody have to do their research. That's like the most important part of the question. In fact,
All right. So first of all, the first currency I'm looking out for, the first currency I'm looking out for is my currency, which is myself. Because we all understand that we are frequencies. So if you're going to invest in anything, you should be investing in yourself. And the
investing in
crypto space
yourself
is big
first.
enough for you to create something for yourself. That is investing in your own
Yourself.
currency. Same way the market gains value by investment, your life can also gain value by adding things to your name. So if you're familiar with growing into a brand, why not start it? Especially when the world is encrypted and you can do so much with blockchain. So why not start a project instead of looking for a project to invest into? You can do a lot with nothing. Trust me. You just have to believe in yourself and,
Yeah,
take the first step. Secondly, I'm looking out for Luna. All right. So I know it's a crypto is currently very, very down right now due to some crashes which we had in the past. But they say there's this saying, I believe, that what doesn't kill you makes you stronger.
makes you
The crypto is
stronger.
literally still surviving, and whatever is not dead is alive. So if it's not dead and it's currently still down over 90%, what do you have to lose? So I have some
Nothing.
investments in
That's it.
Luna, which I'm hoping that with this little logical analysis of Luna, we could see a 70% up if the market could go bullish at any time, because the market is basically still surviving. So, and we have seen multiple markets had such scenarios before. Like ETH, I remember I had an experience like this in 2015, 2016, before the Ethereum 2.1 project was introduced. There was a time we had a big crash, and then the market later survived. And BTC has also had similar scenarios, even Litecoin, but nobody was this down.
A,
I remember
a
Solana also had
clearer
a similar
example.
example, yeah, recently too, but
Yeah,
it's also
Solana was
up.
even down to like $20 last year, and in
So
2020, I think Sushi Swap was one that also went down from like 30.000, and then it picked up
exactly.
from
So
there
so
again.
if Luna is the coin that existed at the time and it was around $100 plus, and currently is still within $1, there's every tendency that we could see Luna again in $20. So that's a lot of
Yeah,
move, if that
that's a sense
happens.
check.
So that's one of my top picks right now. I'm looking out for Luna. And then secondly, I'm also looking out for Phantom. Phantom is, I would say do your research on that. I don't want to give a lot details into that, but you can do your research on Phantom, and it's currently still at a good point to invest. It's still in a clear demand area, and we could see a lot of supply in the future. So my last pick, I would say, is Trons. Right. So the Tron
Tron. Okay.
Tron is a market that has basically colonized the space of um transaction fee. I mean, everybody is literally very, very familiar with Tron being the lowest transaction fee coin to deal with, which has led to a lot of crypto traders using this coin the same way we use the USDT. And USDT, as we can see, it's a stable coin which is linked to the US dollar. So if it was not, I would say the price would be around Bitcoin at the moment because a lot of people are using it.
Very bullish. Yeah.
So if they're doing the same thing with Tron, and we can see Tron is coming out of, I think it's China or an Asian country, that's a very, very, high fundamental analysis to say the possibility of Tron having a bright future is very high. And the space is currently enjoying the transaction fee of it, which could make it very nice to, invest in. So that's my last pick, and you could do your own research into that.
Okay. That's a very nice one. Thank you. I would look to Phantom particularly. Yeah, I want to see what is in. I would look into all of those are nice picks. We have one question here that is quite an interesting one for me. This is, what's your advice on someone that's struggling to secure profits that is made from the market? Because um yeah, that question advice for someone that's struggling to secure profit that is made
Sorry,
from the
please, can
market.
you
This
repeat the
person also,
question?
okay, the question is, what advice would you give to someone that is struggling to secure profit made from the market? That's the question. Now, there's more like a part B, but what that's basically talking about is what's your advice to one battling with emotions and psychology trading the financial market? Because in trading, I understand that the market plays with your psychology and all of that. I think this is more like an extension of the first question, Chad. The question is, what's your advice to someone that is struggling with securing profit because emotions, you're battling with emotions, your psychology, and all of that, and as a result, you are struggling to keep profit. You make profit, but keeping it is the problem. My friend Prince Ola, the first guest, there was something he posted that I think stuck with me. He says unrealized profit is not. So you see some traders have huge unrealized profit and go from these huge profits to drawdowns, significant drawdowns in some cases. So that's basically the question.
Okay, so because we're coming from the aspect of emotions, I would use the aspect of emotions to explain the question. We understand that, as we explained in the beginning of the conversation, we understand that trading is frequencies, and we all understand that emotions are frequencies. That's basically why we have different types. There's a joyful emotion, there's anger, there's jealousy, there's envy, there's ego. These are all different types of emotions that we cannot physically see, but we can feel them. All right. So the same way we can't see the dollar on the market when we're using the system, but we can see it on charts. So you need to understand that your emotions are frequencies that are affecting your currency. Your currency basically is coming out of your body because you're going to be using your faith and your mindset to determine the next direction or the next move you move in the market. So you need to be very cautious of the emotion you're dealing with at the moment. You're about to risk your money. So if you're angry, I don't think that's the best emotion to go into the market with, because you're just either going to be revenging after you lose your first trade and then you lose everything, or you're going to be losing everything at once. And overexcitement is also not an emotion to be going into the market with, because that doesn't help any situation at all, like outside trading or inside trading. There's never been any situation anybody say I was overexcited and it came in my favor. So I think we need to keep our emotions in check, when going to the market. Same way we don't wear suits to the physical market. So you don't come to the financial market online with an angry emotion. That's not the right, dressing or your mood is your dress. In a corporate world, you dress on suits and you dress corporate to your work. In the trading world, the mood you're in is your dressing. because that is how you address your trades. So if you're in a bad mood, I don't think that's the right dressing to dress the market. You're going to get slammed up, down, sideways, and then you start doubting yourselves, and that will lead basically to no good. So it's never a nice dressing to be on, and you should be very cautious of your emotions. And then in general, if you're not making profits, you need to just assess your situation. It's not your method, because I have tested quite complicated, complex, and simple methods like support and resistance, and they all work. It's all perspectives. It's all points of views. So if you are having complications with securing profits, it's likely you have a personal issue that is not with the market. Let's say you have an emotional state to deal with, like what we mentioned earlier, or you could have a physical state to deal with, like somebody bugging you when you're trying to trade, and then that's basically leads to distractions that leads to you losing money or not being able to acquire these things. And these are things that could be happening on a subconscious level. It's not every time these things happen consciously. But if you're conscious of them, you can easily put, boundaries and, limitations to them. So most of the reasons why people are not able to secure profits is not because they cannot trade or they are not able to find the right method. Most of the time is because of the physical challenges we made for ourselves, or maybe by somebody else or a third party. And that is majorly the same reason why the world is on a different path right now. We need to start being aware and cautious of what we are doing. So we are currently in a live stream trying to assess some of the basic problems to our trading. That's a movement we have to be conscious of, so we can be able to apply it on Monday or when you go to trade. If you're not conscious of it and you're just here because you want to be here, then it's no impact to you. I used to tell people that believing is completely different from practicing. So if you're here and then you believe everything I say, and then you don't put things to check and try to cross-check to see where you have your issues with, then you never practiced it. Then this is as useless to you as to anybody who never joined the live stream at all. So most of the time, these same problems come with us subconsciously to our daily lives. You go to an event or you go to a trade, you're not conscious of what you are doing, you just do it because you are familiar with it, and then you end up making a mistake without even knowing. Or you end up having a subconscious bug, an error which was created because you never paid attention to something, or maybe you never checked your risk management planning for the day, or you thought you could trade while you were in the car, or in a complex situation, and then that leads to loss. And overall, you're not paying attention to that to be the cause of your losses. Instead, you're trying to look for a new system and a new mentorship to pay for. So most of the times we have to assess the situations from our own point of view and try to keep ego aside and see ourselves as newbies. And seeing ourselves as newbies, what advice would we give to ourselves to improve at the moment? Because only us know ourselves better. So if you're looking at yourself as somebody who is starting trading for the first time, you can easily advise yourself on where to go and where to go next, because you know what part you're good in and what part you have flaws. So it's either you're evolving or you're dying. The market is always going to move, with or without you. So you're not making money is not because of the market. Somebody else made money from that same market, that same time, that same day. So it's not the market's fault. And if your ego is not going to let you assess your situations from a different perspectives or different mindsets, or trying to make sure that maybe your physicality or your psychology, which is your emotions, are the issues you have to deal with, then you're going to be ignorant. And that is not good for anybody, especially traders. So my own intake in that is it's always from the person. All right. I've never given any advice to anyone that was special enough to make them make profits, other than look into yourself and try to find your flaws, not your best point. The same way we all identify our best moves and praise them, we should also identify our worst and improve them. Or they will keep improving without your knowledge. And if worst improve to get worse, then that's very bad, you know? So it's always a self examination for us to move into ourselves.
That's a very nice one. Jayfx, say in a very pleasant one having you here today. Personally, I've popped and I believe that almost everyone else here have done the same thing. Thanks once again. It's nice having you. How can people find you online, basically?
Jayfx House
Okay.
is expanding beyond just me, and you could find other traders who have invested their time in growing their personalities from what they have learned from me. And the name is Jayfx House. So you can search it on any social media platform. You will get to contact us there. We work on educating the public on how to trade and how to go about the financial market. For me in particular, I'm kind of like, I'm still very young, so I'm living my life and I'm not interested in, you know, looking after anybody, especially when it comes to the financial space. So you can easily learn from the platforms or any of the students who have learned from me in the past. But that is all, and that is how you can contact me.
Okay. That's a nice one. That's a nice one. So the platform is J Forex House. Every platform, every that you can find J Forex House, guys. Look up J Forex House. There's a lot to learn from him. There's a lot to learn from his knowledge. There's a lot to learn from his platforms across different sites. So J Forex House is nice that you are around. Thank you. I guess this is where we call it a wrap for today. So, guys, this is where we call it a day. Enjoy the rest of your weekend. I'll be dropping the recordings from this. See you all next time. Thank you.